Doing money God and Grandma's way.
Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today, for another installment of our quote series, we're going to evaluate a famous quote from Dave Ramsey when he said, "Your emergency fund is insurance." And we're going to view that through an infinite banking lens. Now, let me preface by saying that I have a lot of respect for Mr. Ramsey in being a best-selling author, businessman, financial guru, real estate guru. He's funny. There are times where maybe it gets difficult to listen to him because of the derision that he speaks with to folks or about folks. I'm not wanting to do that here. I appreciate a lot of what he's done. It's considerable. And he reaches a lot of people and he inspires a lot of people, and that's fantastic. What I would like to focus on is this quote, and this is a quote where he said, "What your emergency fund is insurance." And that's from a clip from January 4th, 2018. It's something that I came across. I watched the whole clip. And I'm not here to try and pick apart anything that someone else is doing. I don't necessarily, share what I share on this podcast and video to be able to have folks pick apart what I'm doing. But I'm open to instruction as well. I'm a perpetual student. I've decided to fight that arrival syndrome, like R. Nelson Nash would talk about in his book, Becoming Your Own Banker, by continuing to learn, staying green, learning. And I loved this quote. Your emergency fund is insurance. Now, I can get on board with an emergency fund. It's great to have funds during an emergency. Absolutely. I don't know that anyone would question that. We might have other questions subsequent to that one. But being well funded during an emergency, we're all on board with. The idea of having insurance. Most people will agree that we need to have some kind of insurance. We need to be protected. I mean, home insurance, car insurance, phone insurance, perhaps. Life insurance. Now, we'll start to have other conversations after that. Again, subsequent questions, I understand. But if we can agree that an emergency fund is good and that insurance is good, well, then let's walk this out a little bit further. I understand what Dave is saying. Now, I'm not trying to take his words out of context, but I did find it very interesting that Dave said, your emergency fund is not an investment. Everybody say it with me, not an investment. Your emergency fund is insurance. Now, that's a quote from that clip that I'm referencing, January 4th, 2018. Your emergency fund is not an investment. Beautiful. I get what Dave is saying there. He's saying it doesn't matter whether you're getting 1% on that or 5%. I mean, sure, it kind of matters, but really when you boil down to it, if you've elected a certain amount of funds to be liquid and accessible and positioned for you to use in the event of an emergency, that's not the purpose. It's not your investment. You're doing other things with money elsewhere. I get it. I understand. I'm tracking right along. Makes sense to me. He says it's not an investment. It's insurance. That's what I find interesting, or at least one of the biggest things I find interesting, that it would use the word of insurance. It's an insulation. It's an insurance against emergencies, because Murphy has a law. It's going to happen to all of us. If something can go wrong, it very well may go wrong, right? So when we recognize that Murphy does have a law and that the enemy gets a vote, and we're operating this life in an environment, there are outside influences, that yes, it's good to have an emergency fund to insure us against missing a beat on a lot of the bigger overarching issues that we want to be able to carry on with. With that being said, this is so interesting. This is the same gentleman, and there are others, I'm not trying to pick on one, that will say by term. So now we're talking about something different, right? Dave will talk separately about his emergency fund, separate from investment, separate from insurance, even though he called it insurance. So that's interesting. And then, of course, he'll have over here this idea of buying term and investing the difference. Buying term and investing the difference. And he has pretty set views, and Plenty of people do, and those views could be different about what investing means and looks like. But okay, here's how I'm viewing these issues of, should we have an emergency fund? Yes or no? Where should we put that? What kind of characteristics do we want to have in that entity? Are we putting it in a coffee can? Are we putting it in a mattress? Are we putting it in a savings account, checking account? These are valid questions. Also, should we have insurance? Okay, yeah, let's get insurance. Well, do we want term? Do we want whole? What do we want? And I think there are some great questions that we can ask right there that would have led me to arrive at owning multiple whole life insurance policies from multiple companies and consistently paying more and more premiums, buying more and more of those, using more and more of those to practice the infinite banking concept over the past 7 years. And then we can ultimately get to investing. Sure, we could talk about that. I'm not making investment advice, but here's where I have this benefit of several years of a paradigm shift having occurred over those past several years, where I see the benefit of owning properly structured whole life policies with a mutual company that allow me to account for a need of an emergency fund, to account for insurance coverage, protection, death benefit, and for my whole life, not just for any set amount of term, not just for the next 10 years, 20 years, 30 years, the whole life. There will be a tax-free transfer of wealth to the next generations. But also for investing. See, this vehicle of a properly structured whole life policy with a mutual company is us accounting for our need of finance. If we're practicing the infinite banking concept, and if you're vetting this, good, you're learning. And I applaud you in your learning process, and I encourage you in your learning process. This entity of a properly structured whole life policy is the ideal and the ultimate appreciating asset wherein we can amass capital, access and deploy capital, and recapture capital. What if we could have emergency fund dollars do more than one task? What if those dollars could be compounding uninterrupted, earning compound interest, and still be accessible in the need of an emergency? What if we could procure insurance with emergency fund dollars? What if we could build an emergency fund with insurance premium dollars? Because we're buying whole life insurance that's been properly structured for the banking purpose, and it builds a significant cash value starting immediately. What if we did want to do investing and we could use that same system, that same privatized banking system that accounts for our need of finance, which ultimately leads to whatever we want it to be? So it could be our emergency fund. It could be our insurance coverage. It could be our capital for investing. What if it did all of it? So again, I'm pointing out that I know Dave being very rigid in what he was saying and prudent in what he was saying to someone at that time to have an emergency fund and to view that emergency fund, not being concerned about its rate of return. That's not the purpose of having an emergency fund, obviously. But then again, if you could have compound interest versus not having compound interest with the same dollars, why would you not? Why would you not? I find it very, very interesting that he uses the word, the term, and the thinking of considering an emergency fund as insurance against this environment that we are operating in. And that's really neat because Nash in his book talks about how we could consider an airplane and how airplanes do not fly through vacuums. Airplanes fly through environments. And if we can overlook just whether one plane may have a slightly better performance than another plane, and rather we look at the environment And if we could manipulate that environment to our benefit, how much more efficient that airplane situation could be. It's a really great part of his book. So I encourage you to read Becoming Your Own Banker by R. Nelson Nash. I encourage you to let me know your thoughts on this idea of an emergency fund being insurance, like Dave said, but viewing it the way that I'm describing here. Again, what if those dollars, because we all have cash flows of some sort, unless we're indigent, what if those cash flows could account for all these things in an infinite way? The infinite banking concept. So let me know your thoughts and comments and biggest takeaways in the comment section below, please. And if you'd like to have a conversation about how to implement the infinite banking concept in your household or your business or your investing, then you could reach me at 828-817-4223, or you can email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care.
What a bunch of crap, scam artists, payday lender of the middle class, robbing people. Your emergency fund is insurance.
Is that too much? Did I do good?
Yeah, sure. It's going to get me in trouble, that one right there.
Love you, Dave.